So what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Hey, if you've been rolling with me for a while, you already know, hit the like button, right? But if you're new to the page, hit the like, subscribe, and the notification bell. As a matter of fact, this is Monday. We're going to do a mic check. Make sure that if you see this, that you are subscribed. Don't unsubscribe and click the wrong button. Some of you have made a mistake and have done that. But just because you see me does not mean that you are subscribed, all right? Don't fall for spam in the comment section. They will be there before I will, and anything I say is not a suggestion to buy, hold, or sell. The market has tanked. The market has come down. It'll probably will catch a closing bell, probably be negative 650-ish, and we'll catch the closing bell as it happens. Also, too, this is Moo Moo Monday. All right, Moo Moo Monday. Remember, this is where we're getting our recessionary plays. We've been cashing up, and we've also have been making some gold purchases. So you get 3 extra stock by following me. All right, now 13 free stock. And if you click my link in the description below, so you can get 10, but you'll get 13 just by using my link and other influencers like me. Listen. There's a lot going on. Natural gas is running back up. The fear is the Fed. The fear is the Fed. That's going to be the theme this week. The market is in fear of the Fed. They have their Jackson Hole meeting this Friday. And a lot of people think that the Fed is going to be hawkish now. They go from dovish to hawkish. Hawkish means aggressive, like a hawk. Dove is gentle, like a dove, right? And so because of what's happening, that he has to get inflation under control. A lot of people think that the Fed's job is just the stock market. It is absolutely not. It's the economy. And if the stock market has to be a scapegoat for the overall economy, then he's going to do it. And so we don't know exactly what he's going to do. Is he going to go up 50 basis points? Is he going to go up 75 basis points? Is he going to go a full point? No one really knows. And we do know that when he's talking, the market does not like it. Okay, so let's look at a few things. I took some video with my phone. There is very important to why the market is sold off. And I think it's only fair. This may not be, us running into a hard recession. No, actually it's not. So I'm not going to say I told you so, right? I'm not going to say it when it happens, but I'm just keeping you guys informed. This is, to me, to be fair, though I know we are in a soft recession and the worst of the recession is coming. No one knows when, but this is a normal pullback. All right. This is what happens when the market runs up that much. That was too much, too quick, too fast. All right. So let's listen to this clip I took with my phone, and then we'll discuss it afterwards.
Obviously, that very aggressive rally off the mid-June lows really accelerated in July. It's kind of folded back on itself there. And here's the area that we were all last week pointing out. A normal pullback would get you down in here, 4170 or so, to early June highs. That would show you that it was a pretty strong, persistent rally. Have cracked below that. Also, maybe relevant, we've also gone back to the levels that we were at just about right before that CPI report, August 10th, where the market gapped higher, and then we went on to fresh highs for the rally. We've kind of unwound that just a little bit. So clearly, the idea that the Fed's going to keep tightening at the same time inflation remains an issue, along with growth. Those are the issues.
So this is where he's talking about 4170 or so. So if you can look back in June, which were the June lows. So remember, June dipped. So far, year to date, these were the June lows that everybody's talking about that they thought was the bottom. Myself, I still have been saying there's another elevator down. I believe we will revisit the June lows. That's just what I believe. It may be Q1 of next year. We don't know. But this is what he's talking about, 4170 or so-ish, right? So right here. And so what happens is it ran by and then now it's pulling back down, which is normal. Okay. It was too much too quick. As a matter of fact, there was another video that I took for those of you that like to play the market, and it was interesting that there are some stock that actually rebound the most, that ran up the highest, and there may be some shorting or some put opportunities for those of you that are in those trades. Let me play that video for you.
So we decided to take a look and screen for some of the stocks that could have the most vulnerability in a broader pullback. That includes those that have had the biggest rally since those lows. Now, here's the screen that we ran. We looked at the Nasdaq 100 component companies. They had to have hit a recent 52-week low or worse just since the beginning of the summer, May 31st. And among those, how many have rallied by at least 25% or more from those lows? 14 companies fit the bill. These are among them. Take a look at these particular companies. You've got stocks like Advanced Micro Devices, AMD, also Apple and PayPal Holdings. Focus on the right-hand side of the screen because that's where you've seen their kind of recent rallies and a possible rollover. A lot of relative strength. Maybe they could be due for a bigger pullback. And the single biggest rally off those lows, the recent ones, guys, in the Nasdaq 100, comes from Mercado Libre. So if you're looking for the stock in the Nasdaq 100 that has rallied the most since the lows and could be vulnerable to more downside, check out Mercado Libre, guys.
So hopefully that was helpful for those of you that want to short those type of stocks, man. But when you're talking about shorting a company like Apple, you better know what you're doing, because that is, but hey, everything that goes up goes down, every stock, So that's what I wanted to talk about. I also wanted to talk about the Webull Challenge. Now, the Webull Challenge, you can watch the video before this and see what the Webull Challenge is. Actually, I'll leave the video here in this box so you can understand what the Webull Challenge is. Webull is another trading app, if you guys don't have it, that allows you to do fractional, reoccurring fractional share buying. So it's kind of set it and forget it. And so what I'm going to do is try to beat my own $5 a day challenge. You can join us with that. Just watch this video and see what's going on. Both of those links for Webull and Moomoo are below. If you click my link, you get more free stuff. And you don't have to just open up an account for yourself. You can open it up for family members. So let's look at some other things that's going on. Look, here is one of our plays that we are doing in Moomoo, actually. Remember this morning, if you were on live, we were dipping our toes into GORO around 175-ish. So it's up 2%. I always watch gold when it runs up, right? And look at the VIX, right? So when the VIX starts going high, keep your eye on gold, right? And so, gold generally runs up when the dollar starts to weaken. On days like this, when the market is falling, that means that the dollar is weakening and gold starts to go up. It's just showing signs that people they run to safety, and gold is safety. It's gold is safety, oil is safety, energy is running back up. Those are the things that are just solid. If you totally abandon oil and went to electric charging stations, it's too soon. You could actually make money in them both. And that's what I plan on doing. So that's one of the things that I wanted to show you. As a matter of fact, let's catch the closing bell right now.
As we prepare to get into the close, the S&P 500 down 2.2%, 41.35. First at these levels back a couple of weeks ago. Actually, the last time we were here from before the CPI report. The Dow is going to go out around down 650 at the moment. Small caps underperforming as well. The dollar index hit a new high today. That was one of the main pressure points to start things. That does it here for closing bell.
So those are the things I wanted to share with you guys. You guys leave me a comment on what you think about this market. Do you think that this is just like I showed you, just fair? It's just a cooling off because the market has run up too much too quick? Or do you think that this is the beginning of a downtrend, right? Also, too, what do you think the Fed is going to do? Nobody knows. We're just guessing. If I say the Fed is going to be dovish, he could be hawkish and vice versa. As a matter of fact, he could be hawkish and the market could have already priced it in today, right? And so that's what you want to look at. One of the things I did do is I took half of what I was behind in my $5 a day and purchased it today. And then I'm waiting until Friday. So I just took my risk and cut it in half. All right, good people, we're going to leave it right there. Make sure you check out the links below. We're going to see what this week is going to be. And remember that Jackson Hole meeting with the Fed this Friday. It'll be Friday morning. All right, circle your calendars. We'll see you tomorrow.